traders, Nick Shaheen here looking at oil. We've had a headline over the weekend about the Saudi Arabia bombing of reserves, I believe. So I'm not sure production is hampered. I think it happened over the weekend, and I don't think anyone died, so I'm very skeptic as to who did it and why. Everybody benefits over there. So, we're blaming the Iranians, some people blaming Yemenis or whoever took credit for it. I wouldn't even put it past the people who own the oil that actually lives themselves. Anyway, Iran benefits because it's hampered on production, on selling, because of a lot of people are embargo. They're boycotting it. So a higher price would bring in more money. But everybody wins on that side. I'm just saying. All right, so when the U.S. doesn't really depend on it that much anymore, so it's not a big deal. So what do we do? How do I go long? Do I go short? This is crude oil. Everybody talks oil, but it's really crude oil we're looking at. And this is the futures contract. Overnight, I think it went up to 20% or something like that on the headline. And then Trump came out and said, I authorize release reserves. I got cut in half. And this morning it was up as little as 5%. So the candle is pretty big. This is a daily candle. So you can see it's a doji, meaning it's indecisive. They opened the spike. They tried to sell it back down. They're about where they opened, a little lower. So the day is still progressing, but they're indecisive as to whether they want to run or price it right back out. And so do I chase it? Do I not chase it? I went long oil when everybody was shorting it, and it's been a winning strategy. I haven't added to it. If I do anything right now, I'll probably short it somehow using the SO, maybe some credit call spreads, or buy some puts. But this is not a very easy ticker to trade, because if I don't do in the money or at the money options, then it's hard to make money. So anyway, let's talk levels before I say trade. I'm not chasing, that's for sure. And the level right here is not a coincidence. This level right here is not a coincidence. And I'm going to prove it to you. First of all, the level here is not a coincidence either. If you look, this is from a couple of days high. They fell apart. And here they are falling back onto it. So the bulls are doing their job. Onus is on the bulls usually is to retake the neckline from which they fell apart and then use it as support. So step one, they retook it. Step two is for the bulls to be able to stay above it tomorrow. Now, if the bulls stay above it tomorrow, maybe this has legs. I doubt it. And here's why. So this is not a coincidence, because if I look left in July 10th, 11th, this is where we were. And here we are back at it again. Sticky, right? It's not a coincidence. If I look further left, this is the ledge from which they fell apart not too long ago. What is that? May, end of May. Okay. And this was the ledge, the headline they fought over probably a month before that, March, end of March, so a couple months. So they fought over this level for a while. So if you think about it, this was resistance until it wasn't. They tried to hold it. They couldn't. They fell apart. They came back to it. They failed. And here they are back to it. The assumption is they will fail, or at least stumble, bounce off the floor that they need to hold. So ideally speaking, for somebody who is long or wants or optimistic about it, they want to see, so if we said that this is resistance until it isn't, fall to here, use it as support and re-attack this guy, and then spike off from it to try to do this again. But onus is on the bulls to do that. Okay, so I'm going to zoom out a little bit because I cheated and I peeked a little bit as to prior, because I see here there's something going on. I need to see behind it. So I'm going to go to a weekly chart. I'm going to take out all the lines. So this is a weekly chart showing about 5 years worth of action. So this is 2015, the correction, So here we are on a weekly chart. We can get a little smarter with things. I still don't have any lines on it, so I'm coming clean with no preconceived notions or anything. That's that doji candle that we were talking about. That's that sticky level I was talking about. This is the ledge from which they fall apart. This was where it was resistance, and then we couldn't see anything past it. First note is, over the past 5 years, this here is the level where bulls and bears loved the most. This is where they fought hardest. This is the point of control. And it's closer to the bottom of the region than the up. So the bulk of the action happened between these two lines, and this is the most busy. So this is the value area information from the volume profile. So I'm not making this up. I'm just reading the value chart, okay, the volume profile chart. So meaning up here is unusual. It's at the, based on the history. That doesn't mean it's not going anywhere. I'm just noting the importance of this level. So it's not going to be butter is what I'm saying. And then again, we couldn't see it pass, so here I am zooming out to see. This again is about halfway through this, so also significant. This also significant, same level, also significant. Okay, but here's the most significant. Well, not the most, but look at this. This is back to 2015, 16, May 2015. Look at this collection right here. Weeks stuck in this range. Clearly, this is an important range for these guys. Whoever trades oil, crude oil in this case, it is a significant level. So it won't be butter is what I'm saying. I don't start chasing this morning. Let me see if I can get more information from the monthly. Oh boy. Okay, so we are here, and this was those collection of candles. Remember the 2015? That's the collection of candles. Now we're looking at monthly, by the way. And if I look back, look at this collection. So clearly a pivot point. Up here, they stalled, they based for a big rally, fell through, overshot on the downside. Here it is, resistance, and here we are trying to pivot around it. I'm not saying there's not higher oil. In fact, this chart looks like it could be headed here, but these are months. Okay, so it would need months and months of proving grounds. However, this also looks like a head and shoulder, so you can argue either point. All this comes back to the fact that it's not going to be butter without another headline. Okay, so onus is on the bulls to maintain this ascending rally and not to fall back to here and lose that, because then that would bring a retest of this at least. Okay, so the one thing is clear, whether to go long oil. Somebody asked me, do I go long? Am I going long oil today or short oil today? If you twist my arm, I'd sell calls in the USO, credit calls, to make an iron condor with mine, but the credit put spread is already paid for basically. So I'm not compelled to do anything. It's a rigged market. It's literally a rigged market. There is OPEC. That's like an elite. OPEC could not exist in the US legally, right? It's a consortium of people, companies, entities that is conspiring to set prices and production levels. So by definition, it's manipulated. So why would I even want to bet against them? They can do whatever they want, including bomb their own fields, so, and kidnap their own boats. I'm not playing that game. All I know that if it's falling to zero and people saying it's going to zero, I'm going to say you're wrong. So OPEC is going to come out and defend it one way or another. That I know how to do. To short these guys, and I can say guys because there are no girls in there, I'm not going there. All right, so this is my opinion. Nothing against oil itself and those who are bull. If I'm long, I'm happy. If I'm not long, I think I'd be making a mistake going long right now without proving ground. Wait, what is that? First, I need to know that they can hold 59. Second, once they attack, re-attack 60 point, let's call it 61. The zone is sticky years later, earlier, decades even earlier. So it's not going to be easy to burst through it. That's my opinion. Now, how can I trade it? I can bet on the companies. In fact, a few days ago, I sent out an alert saying Chevron is looking bullish. Triggered an alert, paid nicely whoever took it. PSX, also a friend of mine mentioned it. But I'm not trading those. I'd rather trade those companies than trade the oil market itself, because at least here I have a P&L I can bank on. They will move with the market, and they will move with the oil itself. So these are probably better. All right, Nick signing out.